All right, let's get started and we'll jump into it. So hopefully you can hear me well. If not, drop me something in chat and we'll talk about it. If you can, just make sure you mute yourselves in case you're doing something on your own. If you want to talk, though, unmute and feel free to ask questions. So I'm going to try to mute everybody here. I just don't want to have to play whack-a-mole while I'm talking and figure out who's not muted. So let's get started. Let's jump into it, and I'm going to share my screen. Let's just jump into the markets, take a look at things on the TOS platform here today. So we'll try to keep track of people joining. All right, I think we got everybody. All right, let's jump in. Let's take a look at the market and see where we're at. So let's look at futures, take a look at ES, and see where we are. Nothing earth-shaking, out of the ordinary here today. You could see over the last several weeks that downtrend was definitely broken in here. We've run up. This was really the area I was watching here a bit here, about the 45.85, to see, can we make a higher high here? We obviously made a higher high on this one, and yeah, we did break it, not by a ton, but really by yesterday's jump, we broke above it. So which is nice to see. So really this downtrend's kind of not in play anymore. It doesn't mean we don't have a current downtrend within the big trend. I mean, we're just looking at everything through yesterday, still a downtrend in here, but things look a lot better today and yesterday than they did a couple of weeks ago. So things look pretty good. If we zoom in a tad, just looking at some fib levels here, as we look at some of the fib levels from this low back on 315 up through yesterday's high. I mean, this is just a non-stop uptrend. You got to figure that there's got to be a break in the action somewhere. I don't know if it was yesterday. I don't know if it's today. Today's really not very definitive. Today's just kind of flitting about, started lower, and it could reverse today and still head higher for another day. If we take just a quick look at the fib levels, the 38.2 is really where I'll target. This is right around that 21 EMA as well. The 200 is sitting right in this range in here. So I think this 44, 37 area, this fib might be something to target on any kind of a pullback and then a bounce and run higher. And I do think we run higher in April. Can we come back down here and create all new lows? Absolutely. There's nothing that says we won't do that, but right now I think you've got great momentum. I look at a couple quick indicators here just to give a sense. You can see these white dots. The white dots are the Psar Indicator. If you want, you can look those up in TOS. I love to look at these things to give me a sense of when the market might change direction on it. So depending on where that market changes direction, then I'll start to tighten things up a bit. But you can see usually when those dots get really close and then touch the top of a candle, the next day is the reversal signal. So they get really, really, really close, boom, the next day we reverse, it starts to get closer, 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 closer. Doesn't have to touch it, but when it gets really close, the next day is pretty close to a reversal. So when you first reverse direction here, which, hey, we started this downtrend and then boom, reversed it right in here, you're pretty far away. And these dots start to get closer, closer, closer as the dots move up, even as the market moves up. It's just something that I keep an eye on for potential reversals out there. So we're quite a ways away on ES here. Again, it doesn't mean if we don't come down here to this, to this fib, which is right close to that dot, this would be a potential reversal, but these dots will continue to increase as we go. And if we start to pull back, maybe somewhere in this area, who knows, we could get a sell reversal, or we could just come down, tap this, rocket higher, and these dots will just continue to chase it higher. So looking down here below at the stochastic momentum, one of my favorite indicators, you can see that this thing, when they reverse, and head higher. Usually when they reverse above or below the 40, that's a good sign to get in for a week and do something, make some money on a swing trade or something along those potential lines with it. Yeah, Eddie, I'm going to switch to some weeklies in a minute, because I think that's really where some amazing stuff happens for what I'm seeing. So yeah, we came down, we bounced along this line, we started to separate and head up. So this was all bullish, and it can stay up here and stay bullish for quite a while. It can stay there for a week or two potentially as we meander around. Are we starting to tip over? I don't know. We can just stay up in here. I'm not going to really worry until this thing really starts to head down and wants to break this 40. The CCI is another indicator. It's very similar. So you can see they look very similar in pattern. But what the CCI gives me is when we get to this negative 200 mark or below, and then start to head up through the 100, then things get a little bit more exciting on the upside here. And when they really break the 100, you can really get some moves. So from down below, breaking up through the negative 100 to 0, if it breaks that 100, you can really get some good pops. So these are, this screen for me just gives me, is there potential reversal, or are we overbought, oversold? So that's what I can check out there. The super trend just gives me a sense of, if it's green, we're bullish. If it's red, we're a bit bearish. I just like that as a little bit of a confirmation signal here. But really what I want to look at more than anything are the RSI stochastic MACD, which is this one. And then down here is the Squeeze Pro that you have. You can see that we fired long here on ES back on the 24th. These things will typically run on average about 8 days in length or so before they start to tip over. We are not quite there on the green, but we are, if you start to add in all of the blue, it's right about 8 days right now. So this is day 8, sitting right in here. So this is a good spot that we potentially could start to see some reversal for now. And then MACD, you've got the break early. So MACD is a little bit more of a leading in the squeeze to me. Squeeze gets in a tad later. It's just been staying overbought for a bit. Little green, dark green bar today. RSI super high up in here, but you get a little bit of a tip over. So we'll keep an eye on it. Is this a spot where we start to reverse? Maybe it is. We'll keep an eye on things. And then I'll switch periodically to the Ichimoku cloud in here just to see, are we breaking through the cloud, which we did break through the cloud on ES a couple of days ago. You usually get a pretty good pop when you start to enter and break that cloud. Just another confirmation for me to, hey, do we get on, a butterfly train or something or just a call? I don't buy calls, but if I did, this would be where I would have bought it in here. All right, so there's a quick look at ES. We'll look at Nasdaq. I don't think anything magical is happening on the Nasdaq here. Again, we've broken, just barely hitting, maybe not even broke this mark. So this high here corresponded to yesterday's. We're tipping over a bit. We're not ready to reverse, but we are extraordinarily oversold. We're at that positive 200 level right in here. So it was close. We didn't hit it, but that positive 200, when that thing starts to break down below, if it breaks through that cloud, breaks through the 100, down in here, you can potentially get some decent selling. And say, again, here's some selling until we bottom. Then a little bit of sideways, down, whatever, back up. So there's where we are on Nasdaq. Quick look at the VIX. VIX has significantly come off of its highs, back down to a little bit of a normal-ish range area down in here. But VIX also looking a bit oversold down in here. So can you get potentially some VIX from the oversold moving up? Yeah, you can. So all of these things are giving me a little sense of, the market's just a tad overdone right now, and we'll be looking at some different charts. Let's do a couple of daily charts on some things, and then we'll switch to the weeklies, which is where I think there's some cool opportunities. And then we'll look at trades that are working out there. So I'm going to leave it on this particular screen. So here's crude oil, and here's the fib levels on crude. We came right down to that 38.2 the last couple of days, couldn't really break below it, bouncing off of it. So is this a good potential spot for crude to move higher? I don't know. Just kind of in no man's land in here, which means this is a really good opportunity as far as I'm concerned for a strangle, which is why we have a strangle on. Can we go higher? Absolutely. Can we go lower? Absolutely. There's really no great conviction here, and you've got the Psar reversals coming down. As soon as we meet up with that, it could reverse and go higher. So you're in the downtrend typically right now, but this sideways action is good for, in my opinion, good for a strangle. Nat gas, this is where we are. So we put on a strangle in nat gas in here. You've got this overbought and heading down, but didn't cross or break below anything on the overbought. So it can stay overbought for a while. This could actually turn back up and go higher. We can run up in here on nat gas. There's a lot of stuff going on overseas with some nat gas shortages. So I think nat gas is in a bullish state, but we're going to play that strangle a bit in here, thinking that we could be overbought. Doesn't mean we won't stay overbought and run higher, but I'm betting that we run up into this territory up in here, and then maybe start to relax a bit. I think that's fine for a strangle. Gold. Oops, sorry. Let's take a quick look at gold. Gold, same thing. Now look at gold here. This thing ran up. Look at the fib levels on gold. You're really staying right around this 50. We are right at this 50 fib level. We're bouncing around all over it. We came down, touched the 50, bounced off of that one day, but you're in no man's land again here. In fact, you're more on a sell here on the CCI, but on the Stomo, you're pointing up a bit. It could easily swing up, and look at how close these dots are getting. I mean, this is almost a reversal here, another potential here. We're really close here. I think gold's about to reverse, which typically would happen if the market starts to dip a bit more. So I really like the strangles in gold, and I really think bullish trades or 112s, 111s are really good in gold here. So this gives you some idea of where things are. A quick look at bonds. Okay, yeah, alerts going off. So that alert means that there was a Psar reversal. So bonds here on the 30-year dropping down, got the PC, it got really close in here. I don't know how you guys can see on your monitors, but you can see how it got really close, basically touched almost the top of that candle. Well, today you got the reversal signal. You're coming up from these oversold levels, and you could see a pretty nice run on the bonds here. It doesn't mean that's going to stay. We'll see what happens on bonds as we go in. And then the 10-year, the dot's right on it. So we're looking at a reversal here on the 10-year. So as the bonds raise, the rates will drop a tad. Let's go back real quick and we'll hit RTY as well. All kinds of crazy lines on here for RTY. So on the Russell, you've got Russell in an overbought territory. So you've got it above the 40 here. You've got it above the 100 here. It doesn't mean this can't stay here for a period of time. They don't normally stay there for more than a week or two on average, and we've been there for a little over a week. A huge day yesterday in Russell, which is not something you want to see big giant days if you've got strangles on. However, I think we're overbought. I think we can still run up here. I think you've got some resistance around this 200. on RTY. So on the Russell, I think it's a little bit more bullish in here, coming off of this really nice base that we've built, breaking the downtrend here once already, a second downtrend. So Russell, all good. I'm okay with strangles, even on the Russell here. Can we run? Yeah, we can, but I still think the market needs a breather, which is what I'm banking on to get some of these strangles to play off. So there's Russell. And what time are we? Yeah, we're already at 10:30, man. Gotta go. So let's just take a look at some of the S&P sectors. I'm not going to go too far into it. Let's actually go to a 3-month. Maybe you guys can see this better on your screens. So here's the XLK. Looking at everything here, it's overbought. Here's the XLV healthcare. Looking at it here, it is just getting overbought. And that Psar reversal is getting closer, which means we could see a little bit of selling coming shortly here. XLY, been overbought for a week and a half now, which is going to continue to go higher as long as that's the case. So you could still see some more consumer discretionary. This is going to be largely led by Amazon, Tesla, McDonald's, Home Depot. Those are your 4 big horsemen of the XLY. I think there's another one in there that I'm missing. I'm sure you guys can pop something in chat. Here's the XLC, so your communications. I like this ETF as well. Overbought, been overbought for going on 2 weeks now. At some point, these things are going to need to take a break. XLF, really strange. It was overbought. It's now breaking down below here. You're getting closer to a potential Psar reversal. Didn't get overbought on the CCI though, but we'll see. So XLF, as rate starts to rise, I think you're going to see obviously this continue to raise. So if we get a pullback down here, we'll keep an eye on it. And when you look at these as well, I've got MOBO bands on, the green and the red. When it's green, different time frames. It can give you a buy signal. I also like, if you look at, I don't know if you guys can see really well on here, but you can see that there is a bright neon green, and then there's a fairly bright bluish line in here as well. I don't know what color you want to call that, but that's the 8 EMA, and the neon green here is the 21 EMA. So you can see when these things cross, it's a pretty bullish signal as well. So again, looking at this page gives me a really good overbought, oversold sense, and I love to see the crosses going on here. Yeah, you can get the death cross happening with the 50-200. That means less to me than the 8 and 21 EMA crossovers, because the death cross is behind the times. By the time this thing crosses, okay, this thing could have sold off hard. And you would have been out. So I'm watching the shorter term indicators. And then energy, just been meandering around up in here, was way overbought back in here, sold off, turned down, ran back up, and right now just breaking down a bit on energy. Still in a bullish state, so there's nothing I would do here. And then quickly taking a look at the FANG T stocks. Here's Facebook, and Facebook, again, it's overbought week and a half, like most everything else we've been talking about. And it's still pointing up. It's not even tipping over on the stochastic momentum, a little bit here on CCI as you get into it. So there's where you are on there, but you had this nice crossover here with the 821. It's been in a nice bullish move. Psar is still well below. You've got the 50 as potential resistance here. These things are, I just can't get into adding on to these right now. Can they continue to rock and roll? They absolutely can. And things can stay overbought for a long period of time, several weeks in most cases. But I just want a little bit of a break. Just give me a little pullback on any of these things. Amazon as well. That's not much of a pullback. So yesterday really was an up day, even though we finished off the highs. Today, we're just meandering around in here, but it's starting to tip over here, and this Psar is getting closer. I think if we break somewhere in here, I want to come down to the 21. So if we come down to the 21 EMA on any of these things, I'm buying. So I will buy anything here once it comes down, touches that 21, and we go. So that's really what I'm looking for. You can still buy Google, and it can still run up here. This Psar signal is way far away. It's overbought, and it can stay there. Nothing I would worry about. And if you want to quickly check, where are we on like the squeeze? And these are getting far. MACD has already started to lose momentum. It can still go up while you're losing momentum. But ideally, once that momentum starts to fall, then that's the sign that we're weakening. So as you keep an eye on these things, Amazon, same thing, weakening, squeeze, getting long, eight sessions. Okay, we're right at session number 9 right now. Okay, that's long. Okay, for Amazon, I think that's a good sign that we may be nearing the end of this run up, and we'll get a little selling. Same thing here. All of these look the same. And here's Apple, which is absolutely a crazy upside move on Apple, and Apple's down like 4 cents today. But taking a look at these things, you're long in the squeeze. You are way overbought on Apple. This is why I have a butterfly on. But again, things can stay irrational longer than you can stay in cash. So they can stay up in this area for a while. We are just points away from an all-time high, 5 points away from an all-time high. In Apple and then NVIDIA, same thing. Every one of these charts looks the same. If there's a stock you want to look at, we'll take a look through the watch list, but I want to get to a few other things. Let's take a quick look at our scan today. This is my 8 EMA cross of the 21. Adobe is making that cross today. It's heading up. Everything's heading up. It's not overbought yet. So this is a good looking spot potentially on Adobe. Taking a quick look here. Super trend just turned green a couple days ago. You're just starting to fire positive on the squeeze and MACD. Adobe, good looking spot to put on something bullish, maybe a butterfly in Adobe, and maybe that's something we'll look at. So let me make a couple notes here of things that we'll look at. Let's see if we can get all this done in a short amount of time. So Adobe certainly looks interesting here. I don't know much about that stock, so Activision, the buyout, not interested. All right, Boeing though, I am interested. Super trend, buy signal given yesterday. It's up again today. You've got the break today of the 8 crossing the 21, squeeze getting ready to fire here. Looking over here, we're not overbought. We're heading up here. We're about, if this thing breaks through the 100, I mean, you've got good upside in Boeing. I think Boeing is a good play to the upside here. Let's look at a couple other ones. You've got Bath and Body Works, same thing. You got the crossover happening today. Those are all pointing higher. Bloomin' Brands, another one coming off the lows. Here's Cisco, really good looking chart, struggling with that 200 today, but everything pointing up here, and that break today on the 821. This is a good looking opportunity on Cisco. Disney, another one breaking today. So you get the cross happening today on that, everything pointing up, could be a good opportunity in Disney. DraftKings, we're in that already. But you had the break really yesterday happening, everything pointing up on DraftKings. So I really like it. That's why we got long on DraftKings. I don't know anything about Ginkgo Bioworks, emerging markets. Okay, Ford's another one. Keep an eye on Ford. I think there's opportunities here on Ford. You got the 21 break of the the 8 break of the 21 just happening in here today, pointing upwards. Even though Ford's off a tad today, I think that's a great opportunity to get, big day yesterday. Watch Ford. You could could see some upward movement. Thing to worry about again is you get the 50, 200 at 50 is on a collision course with the 200, and it's going to break it. I don't know when it's going to break it. Maybe it's not going to break it till probably mid-April. So we could get a nice run until then. But again, I'm more worried about as long as the 8 stays over the 21, or the 8 here stays under the 21, you just stay in the trade until it stops. Let's see what else. General Motors, you got earnings coming up, but GM's another one in here. Looks just like Ford. Infinity Pharmaceuticals, Invesco Mortgage Capital. I don't know any of these. Kingsoft Cloud. Okay. Starbucks is another one. Starbucks looks good. Not overdone here. Everything pointing up. Looks really good. Psar way far away. I think this one looks really, really good. So I think Starbucks looks great in here. I think Snow looks really good in here. I think Trade Desk looks really good in here. We might have missed the move, but Trade Desk looks really good. Take Two looks really good. I mean, there's a lot of stuff looking pretty good. So those are the 8 EMA crosses that we have. And then let's do a quick look at how some things look on the weekly chart. So I know it's a lot of charting for you guys, but hopefully it's okay. All right, so let's jump to the weeklies. And this is really where using the same indicators on the weeklies, things look really, really good. So let's just jump down. We'll start with ES here. A lot of fib levels and so forth drawn on here, but take a look. And this thing has just been pointing up. It's really looking good on the weeklies. So I think from a weekly standpoint here, you just had a Psar signal reverse this week on ES. And again, those signals can last, anywhere from a month and a half to 2 months long. So if we go a month and a half to 2 months here, I think we're definitely looking at new highs on the S&P as this thing goes up. And you can see once we, look how long this stayed oversold, like a half a year or more. In fact, when did it actually get there? I mean, you went oversold here back in November of the previous year, and it stayed oversold all the way to September before it started to weaken. So 6 months or so on the stochastic momentum indicator there. But Psar signal reversed this week on ES. Nasdaq, same thing. That little bell ringing. Come on there. Same thing. This week you got the signal reversal, and we're pointing up. So weekly things look fantastic. I want to see just intra week. Let's get down so that we can bounce higher. But that looks really good. And same thing on the Russell was 2 weeks ago. This thing told you it was already on its way. So back here with Psar reversed, but you'd seen here, and this is it. Get in and load the boat because we're going higher, and everything here told you anything more minus 200 or plus 200 or more, when it gets to those extremes and it reverses, fantastic. And usually this, when it crosses this 0 and gets to the 100, you're really picking up some serious momentum. So look at that thing. As soon as it broke, you knew it. You could have rode this thing all the way down from here, all the way down to the bottom, and it told you exactly where the bottom was going to happen on the markets. Same thing if we look at, and if you guys have a stock you want to look at, let me know, yell it out to me, or put it in here. Do I have an open interest or volume filter? I do not. I don't care much about those, is because as an options trader, what I'm looking at is tight bid-ask spreads. That tells me that there's enough interest and volume in what I'm doing. When I'm trading options, I want weeklies. So if it doesn't give me weekly options, I really don't like it. It's not liquid enough, and I want tight bid-ask spreads, but I'm not looking at volume as a confirming indicator necessarily. I stick to the momentum stuff here. However, I do have some charts and that will take that into account. All right, let's take a look at Blackstone. Blackstone told you on the weeklies back here, you know, you had this crossover right here. It's still on its way meandering higher. So Blackstone still looks good. It's been in this for a while, but it looks pretty good. And if you take a look at the super trend, it also turned green at the same time, and MACD also changed at the exact same time. So everything here told you that the momentum had changed back here on January 24th for Blackstone. So super trend told you that. Stochastic momentum told you that. You know, that CCI really wasn't as oversold as the stochastic momentum, but the Psar reversal told you that a week later that it was reverse time for that. So as you look at this thing, you can, I mean, I'm not saying that these are golden indicators, but for me, this was it on a weekly. This is when I would be buying. Okay? From a longer term perspective on Blackstone, it's in an uptrend, looks pretty good. So yeah, Blackstone looks good, but look at all of the FANG stocks here. So let's get in on these things a bit. You know what? Let's stick with the super trend piece for a bit. Okay, look where we are on the weeklies. The momentum completely has shifted. TTM squeeze momentum, the squeeze is ending. The momentum is changing. MACD usually precedes that. It's heading up. So the momentum on Facebook looks really good. From a Psar standpoint, that's already way, way, way oversold and heading up on a weekly. This looks really, really bullish from a base standpoint on Facebook. Yeah, and Mike, we'll take a look at the Russell Strangle in a minute. And here, you know, Netflix, same thing. Look at this thing, way, way oversold, breaking up here. Really good positive signal on that. I want to confirm it. Still red on the super trend, but look at that MACD. It reversed, and now TTM squeeze is reversing. So this is a really good spot. You know, if you want to sell longer term puts, put spreads, something like that, or leaps. You know, I think it's a good spot to potentially look at leaps on some of these guys. Amazon, same thing. Look back here. It told you it was reversing. It's broken positive, you know, and it's really going well. It's actually moving into overbought short term. But as we've seen, you can stay overbought for 3, 4, 5 months at a time. So I think it's really great. This was the, I don't know if it's the buy of a lifetime, because I think there's some definite bad stuff coming down the road. However, for months and months out, I think we're in really good shape on these. There's nothing that I can find. Like Google, same thing, pointing straight up on it. Super trend here is telling you, hey, we reversed that momentum. We've reversed the momentum now. Everything looks the same on all of these major stocks. Hey, we've reversed. Super trend is green on the weeklies. This is a really good spot. If you were buying, best way to play the weeklies is to buy calls 60 days out. I'm not a big call buyer, but I could have sold a put. I just don't like selling puts that far out. It's not my style. But if you were trading these things, the money to be made was in here when you started to make these reversals on here. As soon as you saw all of these reversals, Apple, Microsoft, Apple told you, you know, what was coming a bit back here. But take a look at the super trend. It went green. Look at the MACD reversal. Look at the TTM squeeze reversing higher. You know, after this big momentum sell, now it's going back up. Okay, it's telling you, I don't like Apple as much as the other ones, but it's telling you that if you had bought 60-day calls on all of these back in this area here when it started to reverse, okay, it wasn't even the low yet. This was the low. But, you know, you're above the cloud. Here you got the Psar reversals on most of these things going. Same thing, Tesla reversed this week. So you got the Psar reversal this week on Tesla. It's pointing up. Tesla looks really, really good on it as well. But if you had done it when you got the first signals and the first reversals here, man, you would have rode this thing up 300 to 400 points on calls. So Russell, question here was, is it a tad negative? It's still in that, downtrend. From a weekly though, the outlook, I think in the short term, next couple months is going to be bullish. Okay, you're starting to reverse and you've got some weekly bullish activity on it. However, okay, as we're starting to move in here, if I look at the dailies on it, okay, I think we're oversold, or I'm sorry, overbought. So I think we're in the overbought range on Russell short term. So the reason I did a strangle was, even though we're just getting bullish longer term, I think we're overdone short term. And I think those two factors fighting against each other is perfect for the strangle that we have. And I think you can say that for a lot of the different strangles that we might have on. So that's how I look at it. But strangles are really a probability play. And if you didn't have charting software, I think you would do just fine on strangles, because strangles is pure probability. You're looking for, good volatility. You're looking for good liquidity, and just pick a stock in there. But, we're also, you've got the 200 here as resistance as well. So you've got all kinds of overhead resistance. Even though we're bullish, are we going to break it? I think we will in the next couple of months. However, I think we're going to sell a bit in the next week or so as we head into the first week of April, and then things will turn. So that's why I jumped into some of those. Let's look at our account and just run through some of our trades briefly. So hopefully that was good. If you want to do more of that, I can sit here and go through charts all day long. That's all good to do. So we did a couple strangles in here. So we've got strangles running. So this is our account for the Income Navigator platform. We've got a strangle right now running in crude. And if you remember back to the chart on crude, it's dead, like in no man's land there. So I really like it, but I wanted to peg 100 as where I think crude's going to be for a while. 160 and 74 give me really, really wide here, but because we're doing futures, it's fantastic. You get a really good return on those. So we're looking at it. We're up right now on crude. We're up 25% on this thing so far. A little bit up today. It's all good. Having a decent up day on crude. So it just needs to hang in there. ES, this is a tough thing to follow because there's so many trades on in here. But if we look at ES, the one thing I want to take, keep looking at periodically here is we've got a lot of trades on ES. You can see there's a lot of 112 trades on ES in here. But let's look at the Monday, Thursday ES short naked puts that we put on. 3380 is our oldest one. So this thing's tomorrow. This is one we're looking to take off. It's the oldest one, but we don't take the oldest off. We take the most profitable off. But right now it's at 93% winner. This is a 92% winner, the 3400. That's the next. Then the 3340 is the third oldest, but it is technically the most profitable. So if we're going to take something off tomorrow, if we were taking it off today, we'd be taking this off today for about a 94% winner. Then 3470 is next. That's another 92% winner. Then you've got 3490, okay, which is a different expiration. These are the May 20th. Yeah, these are sitting down there in the 74% range. 3630 is another one. Then we got the 3750 is another one. And then our most recent one that we just put on Monday is already at a 35% winner. So those are your ES daily puts. I will take the most profitable off and put a new one on each week. And just to take a look at it, and let's take a look at a couple strangles that we have on in ES as well. So from a strangle standpoint, the most recent one we put on was this 49.80, 35.30. Where are we at on that thing? Oh, right here. I don't know why I'm looking up. Okay, so this is the most recent strangle that we put on in here. Slow. So right now it's sitting at 30 bucks. We put it on for 30 and 50 cents on a couple days, about a week ago. So that thing's just sitting there for now. The next strangle we have on, the next oldest, is the 3,300 49.40 strangle. This one is currently at $31. We put it on for 38, so it's about an 18.4% winner on that one, but it's not time yet to take it off. And then the oldest strangle is the 3,200 and 48.50. This one. So this is our oldest strangle. It's been on for a while, and this is still sitting at 30. We put it on for 40. So we put this one on for $40, and it's at $31 today. So you're up, a bit on that one with the markets going up. I'm only up 22, 23% so far on that one. So strangles all doing well, sitting in there. And then you can take a look at some of the 112s. I'm just going to grab the oldest one, take a quick look at it, and then we'll get off of this because I'm sure you've seen enough of strangles. But we've got a couple expiring on Friday. And the ones I want to point out for Friday is this one. This is not your typical 10, 43.40. Okay, so this is a 112, but this was a hedge trade version. And the difference between a hedge trade version and an income version is the amount of credit that I take in. So with this one, what we did was we put this on for a 50-cent credit. That's it. So barely any credit at all on this particular one. Let's take a quick look at how this thing looks right now. I can't even fit it all on the screen here. So we'll do what we can. Like I said, I'm not even going to be able to fit this whole thing on screen. You can see this. Oh, look at the credit. I took in 25 bucks to put this on, but look at the size of this trap. Okay, so this trap gives me all the way down to 29.20. Now it's going to expire, but as opposed to some hedges that you pay, I actually got paid to put this on, and I had a $1,500. Okay, so $1,500 trap area that if we had just dropped into here, fine. Okay, I got paid $25 to put on a hedge. That's all good with me. It's going to expire, so not, that one didn't work out as a hedge, which is perfect. Okay, I didn't lose a single dime on that thing because I got it for a credit. I put another one of these on as well. So we'll talk about some of the other ones. And then this 36.50. So let's take a look at this one. This one's going to expire. This is a regular trade as well. So I think it's 36.50, 43.30, 43.60. Okay, so this one's going to expire Friday. I don't know if I can extend this out a little bit if you guys can see. Okay. So this one's going to expire on me on Friday. It's a 112 trade. Okay, it didn't make it into the trap. Oh well, we have to settle for $700 in income on a roughly $5,900 buying power trade on it. So that's not too bad, but $700 on $5,900 is a nice 11.8% winner. And that one's going to come off on Friday. And we put that one on back on February 10th. We're trying to get one of these on a week here. which means we'll bid in this trade 48 days. So 12% in 48 days, not too shabby. We'll take that. So it gives you an idea of how these 1-1-2 trades really start to shape up. And, you know, I always like to look at the overall view of my trades. So here's where we are right now, the sleeping elephant, the whale, as Sweet Bobby calls it, whatever you want to call it. Rod, I don't know what you call it on yours. I think you had a name for it, but the trunk is pretty fat now because I switched to the 1-1-2s. The trunk used to be a lot thinner. So maybe it's not an elephant anymore because it's a big fat trunk, or it's just an overweight elephant now. But look at the size of this sucker. Okay. If the markets go nowhere, we're going to make 17 grand over the next 30 days with all of our ES trades on. Not bad, which is 10% of our total portfolio. If the market drops, what's 10% from here? You know, $460, which puts us at like 42 and change. If the market drops 10%, we're going to make 25 grand. If the market drops another 10%, okay, we're going to make 29,000. Okay, so it's all good. This is what you want to see as you line this up. Now, yeah, can it drop to 3,600? Yeah, it can. Can the market drop 1,000 points from here, 25%? It sure can. Okay, now you start to, now you're going to start to get some losses in there, which is where your risk twist spreads and some of the other trades that you have need to cover your downside. But you'll be taking some of these off and putting new ones on. John Shoulder, the turtle trade. There you go. So yeah, whoever you want to name this sucker, I just name it big ass money. So that's all I care about. So beautiful looking trades. Love these ES trades, got a lot of them on, but that's the difference between a 1-1-2 hedge and a 1-1-2 income. For a 1-1-2 income trade, super simple. We'll put one on just for everybody here. 1-1-2 income trade, let's go out 51 days. I'm going to pick something that's around 30 wide. The way I do this is I would like to get $6 or pay $6. Okay, so I'm going to spend roughly $6 here for a 30 wide, okay? Then I'm gonna pay for it with 2 of the 10s, okay? Which would be this one, 2 quantity, okay? So I make $14 in credit on this particular one. So this is how I like to lay out the 1-1-2s. I want the $14 credit. So I have a 30 wide for $6 that I pay, and then I'll sell the 10s. I mean, $37.80 from here. So 37.80 from 46.07, which is where we are right now, is $827 drop from 46.07, which is a 18% drop. So we're covered up to 18% down from here. So we drop more than 18%. We have got some issues, some things we got to work through. If we don't, I'm making this $14, and then ES, when you place an ES trade, an ES trade is a 50 lot, so you're going to take in $700 on that particular trade. And obviously, when you're placing these, you got to place them in 2 different tranches. I got to do the spread first and then sell the put after that. But you can see how these work. Now, this is how I would set it up if it was an income trade. $700 on $800. I mean, this buying power is getting ridiculous on ES. I mean, it's almost double what it used to be, and the markets are up. So yeah, the buying power has gone up. Eddie, you just pointed it out. I was just saying it. I mean, it used to be like it's like double the buying power that it used to be. I don't know if a lot of people are doing these trades or playing ES and MES lately. So they're jacking buying power up. Market's been going up and the buying power has been going up as well. It's still a good trade. I mean, I'm still going to make $700 on 84.69. I mean, it's still an 8% return in 51 days. So 8% return is a 57% annualized return. So I'm all good with 8% in 50 days. But this is the income version. $14 is what I'm looking for. But if I'm doing this as the hedge version here, I want to get this credit as close to zero as I can. And most likely, I might even want to widen this out here. So maybe we want to go, let's go 50 wide. And then let's drop this thing all the way down. Oh my goodness, where are we going? Okay. I mean, it's a debit technically, or right in this area here. I know we've got other trades on, so it's goofing up. Okay, so here we go. So this is a 50-cent credit. This is the trade now. Okay, so when I look at this thing, I won't even be able to fit this on the screen, but you get the point. So here's what we're looking at on this thing. This is the hedge version. Okay, I go wider on the debit spread. Okay, so this is now a 50 wide debit. I'm still going to go 2 puts to pay for it, but now I go all the way out to 35.10. 35.10 from here, from 46.02, is 1,092 points. Can we drop 1,000 points? Yeah, we can. But that's a pretty hefty drop from here. Okay, that gives me a 24% downside protection in the market for a credit. So I didn't pay anything, and this is actually more buying power efficient. It's going to chew up some buying power. I really don't care. I got plenty of BP that I keep aside. And look, if we drop at all into here, all we have to do is drop, what is that, 120 points? You can drop 120 points by Friday. So if we drop 120 points and we stay anywhere in this trap, this is a $2,500 hedge that I got paid to put on. Okay, so this is why I like these as a hedge as well. Yeah, Rod, yeah, less BP. So it's a pretty good little hedge trade. And you can make this wider. Okay, so I can make this, you can make it 100 wide if you want. Okay, I just have to ratchet up the downside a little bit to pay for that. And so where do I have to go to pay for it? Oops. Somewhere right in here. So somewhere in this neighborhood, right there. All right, so it still gives me downside to 38.20. Okay, now that's a 600-point downside. It's not as big, but the trap is gigantic. Okay, now this is a $5,000 hedge. So if you think the market is, mine's a wider trap with a little smaller, but if you really want to, you can go with 100 wide spread, pay for it, 38.30. What's 38.30 from here, from 4,600, 770. It's a 17% downside. So if you think that we won't, that 17, we're going to stay within a 17% drop, then this one's even better, because you've got this big fat trap, and now I'm making $5,000 as opposed to making $2,000 or 2,500 on it. So I've got a much wider trap. So you can play with these however you want to, but that's how I'm hedging a little bit more these days for that intermediate, 10 to 20% drop there. Again, can we drop more than that? Yeah, but these are only on for 51 days. I don't know if we're going to drop 25% in a month. Well, we could. Who knows what can happen on that. So there's your 111, or I'm sorry, your 112 and 112 hedge versions. That's the difference between them. Let's take a quick look at anything else that we have here, and we'll wrap up. Gold, we've got a bunch of 111 trades on and a strangle. So what's the strangle on gold right now? We just put a new one on because we took the other one off. 1770, 2110. Okay. Yeah. So there's your strangle in gold right now, sitting right in the middle of that gold strangle. and we're up a couple bucks on the gold triangle, just kind of sitting in there. We've also got some gold 112 or 111 trades on 1775, as well as I'm losing my place, 1850, 1860. Boom, here's another one. This is up 170 bucks, so I didn't take everything off here. Okay, so there's a gold 111 trade that we have on. We've got some nice downside in that one, and then you've got one more gold trade on, which happens to be here. I think that's 1810. Nah, I don't know. Yeah, 1810, 1950, 1960. Okay, so there's one, I believe that's it. So 1810, yeah. Yep, 1810, 1950, 1960. So this one's actually in the trap. And this one still doesn't expire for a while, but what are we up on this one now? We're up 1,200 bucks on this one. Oops, I got one too many things on. Boom, there it is. Or actually up 820 bucks. I thought it looked funky. But we are in the trap on this one. So we're sitting nicely right at the top of this trap. Perfect spot to be. And you're up 815 bucks on this trade already. And this was a $2,800 buying power trade. So what's $820 divided by 2810? Okay, yeah, you're up 30% on this trade, and you're sitting in really good shape. You can take it off, you can leave it on. I'm going to leave it on for a bit. We'll see how this goes. And if we get up into here, oh well, I'm only going to make 25% or something like that. All right, so there's gold. Natural gas, strangle, we're up 15%, 16% on that strangle here on nat gas. Just got to be careful on nat gas because you're getting to the switch time of the futures contracts. In Russell, I've got 112, another 112, and I've got a strangle going in Russell. So keeping an eye on the Russell and where we are on Russell. Take a look at the Russell, whatever the heck shape that might be. So let's take a quick look as we run through these. So there's one of my 112s on Russell. We're way up here. It might be worth taking this thing off because we're so far up. We'll take a look at that. This one's not as far up. Yeah, it is. So we might end up taking some of these Russell 112s off. And then let's take a look at the strangle, which is 2280 and 1710. Hello. Oh, there it is. So there we go. Now this one, getting a little tired towards the top end of our strangle. So we'll have to keep an eye on it. It's down a couple $100 right now with that Russell move that's run up. We've made some really good money, so we'll keep watching it. Can you win every single one? No, we'll keep an eye on it. But if we run up here, everything else is going to be paying off, so it's all good. And if we start to pull back, which I think we will for for a little bit here, next week or so, it'll re-establish itself. Well, but overall, we're up nicely on our Russell trades. Apple, so Apple, we're up today, but we're down just a tad. The Apple trade is a reversed broken wing butterfly. I was expecting Apple to drop into here by next week. So taking a look at this, this is a reverse broken wing butterfly on Apple. Just hoping that we drop a little bit right into here. I mean, if Apple tanks, we'll be in beautiful shape. But I'm just hoping Apple just sells off a bit as we go down. Let me check chat here real quick. Does the 111 hedge replace my VIX vol hedge? It doesn't necessarily replace it, but I really like it as a short intermediate term hedge. And VIX, VIX just been so elevated, it's hard to put that trade on. Plus VIX cost me money, and I would rather, buying power doesn't cost me money. It just costs me buying power, and I reserve plenty of that. So to put something on for a credit and get the same properties that that VIX hedge would give me, then yeah, it makes, to me, it makes sense to do it for at least for right now for me. But if buying power is an issue, you got to look at VIX, the VIX hedge. I think it's a lot less buying power for some bang for your buck, but it's really got a sale for that to work. Whereas the hedge, we can slowly go down and still be a VIX 22 and go down 1% a day for 20 days. And VIX doesn't budge. So AMD, we're at a strangle, and AMD, we're at 35%. We're fantastic on that one. Boeing, another strangle. We're at 46%. We're close. We're close on Boeing. So we're a couple days away on Boeing, getting that thing filled. We've been in the trade only 6 days. So 6 days on that. Carnival Cruise Lines, we're up 12%. This is a butterfly, broken wing butterfly. We're in the tent on Carnival. If we can just get up here a little bit more, we'll be in good shape. We're up a whole $24 on this thing. So yeah, 24 bucks, 10% up, what have you. DraftKings, we just put this one on. We just did a butterfly in DraftKings. There was another broken wing. We're just in the tent. Let's go and take it up. We're up a whole 4% on DraftKings. Hood's another one. Hood, we're up 50% on this sucker. We are dead in the middle of this trap. If we go up here, we'll be up 100%. So we're going to leave this rocking and rolling for now. We spent $24 on this trade. So again, we bought this, we bought the fly, we didn't sell anything, we bought it. And we're up 54%, not a bad percentage on this. So we're up nicely on Hood. Monster, I got a strangle working in here right now. Yeah, hello. And we're running over. I'm going to have to go quickly. So Monster, I'm just looking to try to get this. It can't show me because I'm not there yet. So this is what we were looking to put on in Monster. Why do I call it Monster? It's MicroStrategy, which is a monster for me. So I am looking to put on this strangle. I wanted more. It's expensive sucker. So because I'm looking at 50% profit, I'd be looking at roughly, well, I'm not even going to get that now. So, if I really want this sucker, I'm going to have to come down. I don't know where. At some point it becomes silly, but if I make $500 on a $15,000 trade, okay, it's 3% in 50 days. But I'm expecting this to finish in 30 days. So are you okay with 3% in 30 days? Yeah. So I'm okay. I'll go down to maybe 1050 on this thing. I'll just keep slowly. It's been walking me down all day. It started at 12, 11, and now it's at 1050. They're really trying to squeeze me on this thing. NVIDIA, we've got a 112 trade on. It's at 100% profit, sitting way up in the tail. I don't know what we'll do at this point with it. It's possible we might just take this thing off for its profit. Are we going to drop down into the trap here between 190? I doubt it. So probably just take this thing off, free up the buying power, take a 99% winner, and we'll get out on that. So SPX. So SPX was the 0 DTE trade that we put on today. So we sold the 45, 35, 45, 65 put spread 0 DTE. So we sold that this morning for 55 cents. It's just sitting here right now at, making 20 bucks. I did 4 contracts. I don't know why I picked that number, but I did 4 contracts at 55 cents because I just wanted to make some airfare money because I want to go somewhere. So I'm just hoping today we'll knock out a quick $200 winner and we'll go fly to Florida or something for a week. SPY, these are the risk twist spreads in here. So there's 2 of them on, but this gives you a sense of what we look for in here. If the market sells down to that 385 mark, which, the 38.50, which is where you started to see on our 112 trades, that's where those started to lose. Well, this hopefully starts to win, and now we start to win $20, $30, $40,000 or something if the market really sails down. This is going to help offset those. So there's your risk twist spreads. We're at the top. We're not in this valley of death. It's barely it's still a loss, but it's a hedge. So it costs me money to put hedges on. I'm okay with that. Tilray is another trade that we just put on today. I don't know if I even posted this thing yet. Did I post Tilray? I don't think I did, because it got filled while we were on here, I think. Yeah, so Tilray got, Tilray. So here you go. If you're not in it yet, before I post it, you're gonna know. I did the May 20th, the 415 strikes for 55 cents on Tilray, and it's down because Tilray's up. So Tilray is just on fire. Cannabis stocks on fire. So we just put the Tilray on. You get a better price than me. And then TLT, we also did a put spread on TLT. Here, we put this one on yesterday. So we put this on yesterday. It's up 35%. So it's all good. If we get to 50%, we'll take it off and make a little bit of money on this one. So if we get to 50%, we'll make, I don't know, what is it? $250 or something. I don't know. $300. I think we'll make $300 on it. So these all add up, and that's really, that's really it. Yeah, Gabe, absolutely. I was just down there too. I wanted to come down again. So we'll definitely catch up. Back in Florida, love Margaritaville down in Hollywood there. So I can hang out, chill out with Jimmy Buffett, have some drinks on the beach, and let this thing work. And I don't have to sit here all day and watch stuff. How many risk twist spreads do I have on? For this account right now, there's actually 4. There's a 3 tranche and a 1 tranche. So there's actually 4 risk twist spreads on right now. It's probably not enough for what we have, because we've added some trades in here. So I'll probably take some things off on this account. When I look at this overall account too, I mean, we're up, over 10% for the year. 30% is my goal anyway. So we're already on our way. My delta coming into today was actually negative. It's now positive by 91. So I'm barely positive delta. So delta of 91. My theta is 892. Again, I'm a theta trader. Love the theta. We're up nicely again today. And my buying power is down a bit because this monster trade is sitting out there percolating with a monstrous $15,000 buying power effect. So taking without that monster trade that I may not put on, I might look to do something else. If I take that monster trade out of the mix, my buying power is 50% right now. So I'm at 50%. This is 100, and for this portfolio, for the Income Navigator portfolio, which is not my only portfolio, but for this portfolio, we started it last January 2021 with $100,000. We finished at 162,000. We are now at 178, almost 179,000 in there today. So we're up $79,000 in a year and 3 months. So not bad. So 79% in just over a year and 3 months. But my buying power in here right now is 72,000. So right, 50%. It's been as high. It's been higher. It's been lower, but right now I've been keeping around 50 to 60% buying power in this. But I have a few more trades on right now because I'm really looking at this market, thinking that there's some opportunities here. So I think we'll close that NVIDIA one out. We'll take the 99% winner. We'll move on from that. We'll put something else on. I want to be ready. And then we have a 112 hedge coming off Friday and a 112 income trade coming off Friday. So we got some trades coming off this week. Those are all gonna free up like $15,000 in buying power when these come off. So that's gonna put me back to close to $90,000 in buying power on a $178,000 account for the Income Navigator portfolio. All right, well, I hope this was beneficial to everybody. It's an hour and 15 minutes of me yammering on. So hopefully you got some good stuff out of it. And if you have any questions, we'll address them all in Slack. We'll see you guys then. Have a great rest of your day.